Hey, good morning, everybody. Happy Monday. Hey, Julie, Thomas, Tom, Mike, Joe, how you guys doing? John, how's everybody doing? Larry, good morning. Glad to have everybody here. Up and at it this morning. Good morning, Michael. Okay, so this week, wow. Next Monday will be a holiday, so it might make, toward the end of the week a little bit kind of wishy-washy. Everybody taking off a little early, that sort of thing. Hey, Steph, my trade forever. The big note I wrote to myself this morning, here it is. Today will be challenging for new trades. I really think today will be challenging, and we'll get into why I think that in just a second. For this morning here, we're going to be looking at UVXY. These will be charts with a trade plan on them. UVXY, SQQQ, QID, SPXU, PSQ, SNOW, SNOW, Marvel, MRVL, and FNGU, and SNAP. These will be trades that we're going to look at here in just a moment. First, let's do this. So here's what we've got to look forward to this week. Hey, members, by the way, if no one knows how to go find this on the members page, just shout out. Not right now, but shout out a little bit. I'll show you how to get there. So not a lot going on today. Tomorrow we've got the Case-Shiller Home Price Index, and I would just pay attention to the bright colors. Red more important than the green. After that, it's a non-issue really. So let's see. Tomorrow we also have the consumer confidence numbers at 10, and then JOLTS number at 10 as well. Wednesday is pretty light for the morning, and then we get the ADP number, Chicago PMI, and then the EIA petroleum sales status here later in the day, 10:30 a.m. later in the morning. Thursday, it's the same lineup. It seems like, nothing changes once you get used to these. They all kind of fall in the same time, same place, all the time. Jobless claims, productivity cost, PMI number, SMI manufacturing, construction spending. There's your natural gas report again. And then on Friday, motor vehicle sales. That might be a good one to pay attention to. Employment situation and factory orders. So Anyway, it's good to know when this stuff is coming up. That is pretty true. Yep. Let's see. T2122. T2122 is way deep. Well, it could be deeper into the oversold area, which I think is going to cause a little bit of chop. You've got dip buyers going to try buying the bottom. You've got the bears. It's going to keep trying to push us down. Down here, it's like a lost soul when it's down here. Just because it's down there doesn't mean the market is oversold for a buy. Okay, doesn't mean it's oversold for a buy. That's the key right there. So this is where I want to revert to the trend. Follow that trend, and usually it's not starting down here. It's well up into this area, and personally, I think most people know I love it when we're in the overbought area, because that means that we're trending. As far as indicators go, or chart like that T2122, T2123 is probably my favorite there. Take a look at the hourly chart. You can see that we're clearly controlled by the bears. The only moving averages I worry about here is the T-line and the red dots or green dots. The 50-period moving average has no value to me here. I don't look at it on this chart. I look at it on another chart, another monitor, and I don't even have the 50 up. All I've got is price, the T-line, and the trend indicator here. When it's bearish like this, you'll make more money. I make more money looking at bearish trades, not long trades. Look at the 15-minute chart. You can see that it is clearly bearish as well. I had somebody ask me the other day, when this is really, has really dropped, does that mean it's oversold and it's ready to turn? No, that's not what that means. It will turn when it's ready to turn. It doesn't mean that it is ready to turn. The market will turn when the market turns. There's no logic to, hey, it's way down there, let's be a buyer. Not a smart move. What else do I have here? Well, let's look at the SPY, and let's go to the weekly. So something that we've pretty much been adamant about is the weekly chart is controlled by the bears, and you can see it is clearly controlled by the bears. Are we going to get down and test these lows? I certainly can't guarantee we are. I'm not even going to say we are. I'm going to say let's follow the trend and trade the trend that's in front of us. Let's look at the daily chart. Here a few weeks ago, we were very bullish through here. It might be time to be very bearish at this point. So, those 5 swing trading rules, I changed number 1 and number 2. I switched them around. Number 1 was trade in the direction of the trade being considered, and number 2 was trade in the direction of the market. I switched those around. Number 1 should be trade in the direction of the market. Number 2 is trade in the direction of the chart being considered. So while we're trending down right now, and what I'm basing that on is we've got a high. Maybe we can call that a failed high. Certainly can call that a failed high. We come up, we're down, price is below the trend indicator, price is below the T-line. I call that a downtrend now. That's based on short-term swing trading. So, what else do we have? I mentioned, I don't know when I mentioned it, maybe last night I sent out a little, social media thing that the market or a lot of charts are going to be testing their 50-period moving average. If they haven't already, Friday. There'll be a lot of them. So that 50-period moving average, I think, is going to be extremely important. Just take a look at where we are on the SPY. Take a look at the Qs. Qs are right there right now, so it's going to be very, very important. The diamonds, we're right here at that 50. IWM, we're not quite there. We're not quite there at the 50. That does not mean it's not going to get down there. In fact, I suspect we are going to get down there and retest that 50 here. Okay, so now what do we have next? Okay, let's get into looking at some of these charts. I've got them all marked up. Let's do this here.